Investors, welcome back to the channel. If you ever wanted to get started with investing and you think you don't have enough money, well, I'm going to go ahead and make this video to show you that is not true. Even if you do have less than $100 in your account, I'm going to show you that you could go ahead and start off a 3-stock portfolio right now after watching this video in order to get your investing journey started. Now, my name is Tim, and on this channel, I try to give you as much information as I possibly can in order for me to help you keep pushing your investments to greater levels. I did go ahead and start off this account portfolio with only $65, and I'm going to document its journey by putting $250 every single month and automatically keep reinvesting that money in just 10 stocks. The purpose of today's video is not to go over the account portfolio, but to show you if you do want to go ahead and get started with investing today and you have under $100, I'm going to show you 3 stocks, or rather 3 ETFs that can be used right now to grow that small account portfolio consistently over time. Let's go ahead and get started. So the first ETF that I would consider if I had to get started with a fresh portfolio today is going to be none other than SCHD. Now, SCHD is going to be one of Charles Schwab's dividend equity ETF. So this is a very, very good ETF in order for you to use as a foundation to start off your portfolio. Now, I do have SCHD in my bigger account portfolio, and it is one of my foundation stocks. I really like this stock because of its consistency. It has been paying dividends now for, I believe, more than 14 years, and it's consistently paying quarterly dividends. The dividends are paid in March, June, September, and December. So the SCHD is a good stock. One stock I would definitely recommend if you were to go ahead and get started with investing today. Now let's just go ahead and check out a bit more information about the SCHD. Now, one of the reasons I like SCHD is because it's not very heavy into the tech sector. If you go ahead and check out all these ETFs, you're going to see the majority of them, the highest percentage usually is in the tech sector. However, right here, you can see it's more diversified. So you have energy, you have consumer defensive, healthcare, industrials, etc. This makes me feel a lot more safe, a lot more confident when an ETF is more diversified and it doesn't have a huge percentage in tech. And one of the ETFs I'm going to recommend today, you will see that's very heavily voted towards the tech sector. If you go down, you're going to go ahead now and see the top 10 holdings. Now, the top 10 holdings here are really, really good dividend paying stocks. Now, if you want to go ahead and be a stock picker, then you could go ahead and choose any one of these stocks here in order to receive consistent dividends. But in my humble opinion, I think it's way better in order for you to capture all that growth, all that dividend paying on a consistent basis with just a single ETF. And in this case, my number one recommendation is going to be SCHD for those quarterly dividend payments. Payout yield for SCHD is around 3.81%, so roughly around 4%. But the company has been doing this for a very, very long time, and I have utmost confidence in SCHD. Now, if I were to go ahead and recommend a second ETF that you can use in order for you to get started with investing today, is going to be none other than JEPI, and that's going to be JEPI. Now, the first ETF I showed you was a Charles Schwab ETF. This one is going to be a JP Morgan. I want to diversify across companies as well as across ETF. So the JP Morgan Equity Premium Income ETF is going to be this one right here, and it does trade for a very fair price. Now, the price does not matter, so I'm not going to highlight price very much. The reason why the price does not matter is that right now, almost every single brokerage allows you to go ahead and buy shares for fractions of the cost. So if you do not have $58 to go ahead and buy a whole share of JP Morgan, feel free to go ahead and just invest whatever you have. Start with as little as $1, and then you could go ahead and build from there. The most important thing is for you to get started. Now, with the JP ETF, I'm going to go ahead and show you a bit more information. So right now you could see that this one, although it has tech involved, tech is not heavily rated. So for the technology, it only has 18.74%. Healthcare, you see here 14.58%. Industrials, 13.64%. More than likely, this ETF probably started off with the top 4 here being equally weighted, which is they probably started off with like 14% of the portfolio with the top 4. And as time goes by, the tech sector has outperformed most of the other sectors. So that's why it's now 18% by them not even having to invest additional money. If you were to go ahead and go down, You could see the exact stocks that they are invested in. And once again, they're very, very good stocks. You have Johnson& Johnson right here. You have Alphabet, Class A, Analog Devices, which I'm not very familiar with, Homet Aerospace. So this one gives you a bit of diversity away from your SCHD. So you have diversity for dividends, and now you have diversity by ETFs, and you also have diversity by sector. JP usually pays a monthly dividend, so this one is very, very good in order for it to get that consistent cash flow. The dividend yield on this is going to be around 7%. So expect to get a check every single month if you go ahead and invest in JP. So the first ETF I would recommend if you want to get started with investing today with only having a 3 stock portfolio is going to be SCHD is going to be my number one, which I would go ahead and use as a foundation for the entire portfolio. The next ETF I would consider adding is going to be JP, which is a JP Morgan ETF. And then the last one I would go ahead and add is going to be none other than VTI. Now, VTI is going to be Vanguard Total Stock Market ETF. So now we diversified against company. You have Charles Schwab, you have JP Morgan, and now you have Vanguard. You are diversified because in every single one of these ETF, you have several different stocks, and all 3 of these ETFs has been paying for a while, with the exception of JEPI. JEPI has only been paying dividends from 2020. SCHD has been paying for 14 years now, so that's pretty consistent. And this one is the best on the list, most consistent. It has been paying for 24 years. The dividend you're going to be receiving from this ETF is going to be in March, June, and September, which is exactly similar to SCHD. Now, the yield on this is only a 1.1% yield, but just remember, the 1% yield is going to be on 342, so it's still going to be significant. And the fact that it has been paying dividends for 24 years tells you that this yield is going to be growing as time goes by. Now, I did mention at the start of the video that one of these ETF is very heavy into the tech sector, and this is going to be it right here, which is going to be VTI. VTI has 33% of the entire holdings in the technology sector, followed next by financial services, consumer cyclical at 10%, which is third, and the fourth top holding is going to be the healthcare sector. I really like this particular ETF because of the amount of time it has been paying dividends, the amount of time it has been in existence, and also the dividend yield. Like I said, don't worry about it being only 1.1%. It is 1.1% based on the share price. The share price is pretty high, but once again, you don't need to worry about share price in today's markets because you are allowed to go ahead and do fractional shares. Now, if you go ahead and you go down to the top 10 holdings, you're going to see most of the most common names, which is going to be Apple, number 1, Nvidia, number 2, Microsoft, number 3, and Amazon right there as number 4. Now, the thing about these ETFs is that these ETFs, although most of them are passive ETF, as time goes by, they do go ahead and they make changes to the ETF as is necessary. So if I had to go ahead and start a portfolio right now and I know nothing about the stock market, I do not want to be a stock picker, I'll just go ahead and make a 3-stock ETF portfolio. The stocks or the ETFs I would go ahead and add to those portfolio is going to be SCHD, which is Charles Schwab. I'm going to go ahead and add JP, which is with JP Morgan Chase, and I'm going to go ahead and add VTI, which is going to be part of Vanguard. So you're now diversified across sectors, you diversified across companies, and this type of investment is what's going to be known as a set it and forget it investment type strategy. The reason why it's going to be a set it and forget it investment type strategy is that every single month, every single week, whatever you decide for your portfolio, you're just going to be going ahead and just deposit money into the account. And then you're going to go ahead and set this up automatically. Once you set it up automatically based on your frequency, whatever you choose on a monthly basis for me, each one of these stocks are going to get a certain percentage of my portfolio. So let's say you're going to go ahead and start today with only $100. Then you're going to go ahead and send $25 every single month or every single week to each 3 of these stocks. The other $25 you're going to hold in the portfolio, and that's going to be there just in case an opportunity arises, and opportunities do come up a lot. So there you have it, new investors. If you were thinking about starting investing today, then stop thinking about it. Go ahead and start doing it today. There is no excuse to not start it today, especially now you could go ahead and buy with fractional shares. If you know nothing about the stock market and you don't want to be a stock picker, then the best thing for you to do is go ahead and invest into ETFs. So the three ETFs that I did go ahead and highlight in this video, go ahead, you could start with those. Make sure to set it on autopilot, where a certain amount of your salary or a certain amount of your income goes to these three different ETFs, and always have a cash reserve. The cash reserve is going to be there in case an opportunity presents itself, and that's going to allow you to grow your portfolio exponentially over time. If you guys have any questions about these three ETFs, or if you're still on the fence about going ahead and start investing today, then let me know in the comments below. Also, if there's any ETF you think out there that is better than the three that I did highlight for today's video, I would love to know. Put that in the comments below as well. Now, remember, my sole purpose, my main goal on this channel is just one thing and one thing only. I will be giving you as much information as I possibly can in order for you to go ahead and use that information to keep pushing your investments.